Welcome to the Real Freedom Podcast, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Welcome, everybody, to another episode of the Real Freedom Podcast. I'm excited to share today. We've got Karl Krauskopf. Karl is experienced investor. And so a little bit of a background about him. So he got his background is really in flipping homes. And so he focused on acquiring and renovating undervalued properties in areas experiencing tremendous market appreciation. So as he diversified and scaled his business, real estate development was the natural next step. And now your primary focus is with your company, Auroras Investment Group, which is based out of the Seattle area, focusing on real estate investing and multifamily developments such as townhomes and apartment buildings. So we will dig in a little bit more about that and how you got started in real estate. So welcome, Karl. We are so excited to have you.
Oh, thanks so much for having me, Mike. This is an honor. I really appreciate it.
Why don't you just give us a little bit of more about your background, kind of how you got into the real estate space and kind of what you guys are focusing on here today?
Yeah, absolutely. I'll start off by saying if I can make it, and if I can make the transition from a corporate W-2 employee to a full-time investor, just about anybody can do it. I spent I'm about 4 years in the business. The first 6 months of that 4 years was pure self-education, reading every single book on real estate I could get my hands onto, listening to podcasts during commutes, listening to podcasts and audibles during the gym sessions, and just absolute consuming any and every piece of information that I could get in that 6-month period. Started off real slow, obviously, because I was still working a 40 to 60 hour a week day job. And it was rentals. And then I started getting into flipping homes because, I knew that the rental side of things would just take a little bit too long for me. And that I wanted to achieve at the point that I was focused on was really, truly financial freedom, which to me meant that I no longer had to work for somebody else and that I could work for myself as much or as little as I wanted. The original goal was let's get $10,000 cash flow and retire and move out to Thailand or something like that. Since the last probably about 18 months, it's changed drastically to, instead of doing that, of building a legacy, building a business, and having multi-generational wealth. So did a lot of flipping homes over the course of those next 3 years. I've been full-time on the investing side for the last year, and have been new development. We're at 12 units of construction, townhomes, detached ADUs here in the Seattle market, and apartments down in Tucson, as well as expanding out into the Southeast market.
Fantastic. So I know everybody's curious, when people first start flipping houses, kind of how did you identify properties? How did you find financing? How did you find people to work on the properties? Could you just share a little bit about those early days? Because I know it's so hard for people to get started, right? And some people are okay. They're like, let's just jump in, guns blazing and see what happens. And, whatever problems we come up, we can overcome. And some people are like, I want to just dip my toe in the water and make sure that it's okay. So some people are a little bit more cautious. So how did those kind of early days start out for you, and kind of How did you get your footing?
Sure. So I'll definitely say that I'm in the first camp there in terms of let's get out, let's get going. The underwriting looks solid and it can't be a bad deal. So in terms of where did I find deals, it was brokers, it was MLS, it was understanding the whole wholesale agent perspective, which is selling the rights to a purchase and sale agreement. So working with wholesalers in that fashion, and the first deal so happened to be a wholesale deal. Believe it or not, I actually planned on and started being the general contractor on the project itself, while also holding meetings for my remote corporate job. And I went as far as buying Wi-Fi for the home that I was flipping, and actually working out of that home for the course of about 5 months. So as general contracting, I was managing the subcontractors, still holding corporate meeting phone calls, on site, which, got a little bit hairy, so to speak, when, my team members would ask, why is there so much noise in the background? It was, we're just renovating our home. So it was, slight misleading there, but, in the end, that first flip panned out incredibly well. Found subcontractors purely through referrals, referrals from a network that we have up here in Seattle, where it's all about, investors and trying to figure out how we can each help each other. And so, subcontractors came out from there. So did the general contractor. So it's great.
Okay. So you got, what was that first property? What was it? Single family?
Yeah. So we flipped about a dozen single families over the course of those 2 years. And, we didn't really get into the multifamily until the last 13 months when we started the developments and the apartments.
And what were you looking for when you were identifying deals? Because I know that's a challenge that a lot of people have, is how do I know it's a good deal? How do I know what areas to focus on, or what neighborhoods or things like that?
Yeah, good question. So from a focus standpoint, it's knowing what your backyard is, right? Really truly understanding the good, the bad neighborhoods, the neighborhoods that are experiencing tremendous appreciation, those that are relatively stagnant. And I would even, obviously for here in Seattle, everything can be a block by block basis, not just from a, safety and crime and appreciation perspective, but also from believe it or not, a topographical and a soil perspective. Soil meaning it actually will limit future development opportunities. So that you have to take that into account when you're looking at properties here. So first it's finding your primary market, then dialing it down to really, it was for me, it started to become zip codes. So really looking at which zip codes are the ones experiencing the most growth, the most where are the ones that are in the path of progress, and really honing in on those. I'll say in my early days, I said I'll buy, fix, and flip anything in the 30 to 50 miles within range of downtown Seattle. I ended up taking on one flip that was about 50 miles from Seattle. And come to find out, I ended up having to general contract that project for the last 3 months of a 5-month project. And that meant going down there every single day, which was about a 90-minute drive each way, while also working the full-time job. So I would say, for us, it's no longer really focusing out in those areas that are hard to reach from a local perspective. It's, again, just identify those zip codes, those neighborhoods that are experiencing the tremendous appreciation from a flip perspective.
Now, from a property, kind of scope of work perspective, was there anything that you looked for there? I know a lot of people like value add opportunities, turning a 3-bedroom into a 4-bedroom, updating square footage, adding a garage, that kind of stuff. Was there anything specific that you kind of lean towards in terms of kind of the property itself?
Yeah, great question. So it was the value add side of things. And for us, we've got basements here in the Northwest. And what we would do there is go and look for unfinished basements and add typically, 1 to 2 bedrooms plus a bathroom. Towards the end of the kind of, I'll say, flipping career, right, when we transitioned from flipping to developments and apartments, is we were really focused on not only value adds, but also those that were questionably teardowns. So we started doing, all studs out remodels, new roofs, all new siding, windows, all the trades within the studs, and even foundations, and converting those into luxury high-end homes. While also adding bedrooms and bathrooms.
There's a few different strategies here. Some folks are looking at the kind of the mid-range neighborhoods, finding the ugly duckling, but there's just a little bit less meat on the bone when you do that.
Right.
Versus going to the high-end neighborhoods, right? Because you can add and bring it up to that luxury piece and command a premium. And that's where you can really net a lot more money.
Yeah. And one thing that I should have mentioned is that, we never really truly operated in the what I'll call the high end market.
Mm-hmm.
High end market I would define as $1.5 million minimum purchase price.
Mm-hmm.
And so the highest end single family flip that we sold was about a 1.25 million. We originally underwrote it at 1 million. So
Mm-hmm.
we experienced some great appreciation from the timing of the market, which was great. But we always operated in that kind of mid market cycle of homes.
So then from a financing perspective, a lot of folks are curious, how do you run with that? Are you guys doing cash out refis? Are you just selling, taking the proceeds? How are you structuring that with a lender
Sure.
or private partner here to make that work?
Sure. So up until last year, we've done everything we did was sell. So we didn't hold on to anything. Of course, everybody who does that always says I should have held them. And I'm certainly one of those people. I would have loved to hold those homes. Some of them obviously wouldn't have penciled out from a refinance standpoint, but those that did would have been great by now from an equity standpoint. Right now, we're using hard money loans on just about everything from the from the construction, the flips, and then the ground up construction as well. We're using hard money. So the goal there is to get in, get out as quickly as possible, while also doing every single thing you need to do from the scope of work perspective.
Yeah, no, that's helpful. And so for folks that may not understand what hard money is, it's basically a loan where it's easier. I should say you don't have to personally qualify. You're doing it based on the numbers of the property. It's a little bit higher interest rate, but yeah, the focus is it's about turning. And so for those folks, they're willing to invest that because they know they're going to get their money back more quickly, and then they can just recycle that.
Yeah, absolutely. And on that is, you'll typically get better LTV rates, so higher LTVs, 85, sometimes 90% is typically where we like to play, between the 85 and 90% loan to value. So we're typically only bringing 10 to 15% of the equity of the entire project.
Okay, so now you're doing the single families and you realize you want to get into the multifamilies. What were some of your next steps from there?
It was really understanding how to raise the capital. So how am I right on the flip side? On the flip, we're typically about $75,000 to $125,000 of liquidity, bringing in upfront as well as during the holding period, and really expanding into the new construction where we started raising from 700 to about 850,000 last year on the two projects. And that was really a consequence, or rather a result of doing these flips and having several different investors who were wanting to invest with us, but unfortunately on a flip there's only room for one investor. And so then that's when we started looking at, well, how do we scale our own business, and then B, how do we work more with more investors? And it was the syndication route on both the ground up construction of new build townhomes as well as the apartment value adds.
Raising that money, was it strictly just the people you've worked with in the past? You said, hey, this is kind of what we're looking to do here. Are you interested? And then in like a $700,000 to $800,000 raise, kind of how many folks are involved in that?
Yeah. So on both of those raises, it was both investors that we have worked with before, as well as new investors. In both instances, we had relationships with those investors, and so it was really performing for those investors. We brought on some new, but it so far it's turning out really great. We're selling out one of the full ground up constructions right now, and so far we're looking like we're going to exceed our target returns.
Awesome. That's great. So then now in this case, you're not putting up your own money. It's strictly coming from your partners.
Good question. So we ended up investing some of our own, right, from a skin in the game perspective. So we do have some invested as the general partner alongside of our limited partners.
where you're at right now, then let's talk about a few of the projects that you guys have done over the past, 12 to 18 months,
Mhm.
just to give folks an idea. So what types of projects are you taking on? I know you'd mentioned new construction
Yep.
townhomes, but yeah, talk about those projects a little bit more.
So on the townhomes, typically, we're buying there is permit ready projects where a developer, or let's call them the seller, has gone through all of the entitlement processes, has obtained permits, and is ready to break ground. And for typically one of two reasons: is they want to reposition their capital in maybe a bigger, better project, or B, they're looking to diversify and eliminate their risk. So
Mhm.
for whatever reason, the developer, the seller, is looking to sell the project, not go forward with it. And that's where we come in. We buy the permitted townhome sites, or soon to be permitted apartment sites as well. And we've
So
got
this would be essentially just the dirt, the tear down's already been done, the zoning's cleared, and now it's like, okay, who's going to be the person that's going to start swinging the hammer, pouring
yeah,
the cement, that sort of thing?
yeah,
That's the spot you guys come in.
yeah, exactly.
Okay.
So we've got builders, we've got general contractors, and other developers that we've built relationships with over the past, whether it's through actually directly working with them, or having other investors having had worked with them directly too. That we're all teed up. We are primed and ready. We've got a good sense of what cost of construction is going to be, which obviously is changing every day. At least it seems like. And working with them and getting bids, getting it under contract, and finishing our due diligence, obviously, and moving into these projects with eyes wide open.
Awesome. How are you finding those projects then? Is it just networking because of, I think for a lot of folks, it sounds complex, maybe people that haven't been in the business, but for me, it just seems like a natural evolution, right?
Sure.
The investors you've worked with, you're building relationships, you're growing those relationships into larger deals.
Yep.
Probably the same thing on the vendor side. You've built those relationships, you've grown those relationships, and it's kind of the next natural evolution as you grow. Is that right?
Yeah, I would absolutely say that's the case. Is as you perform for investors, not only do they want to invest, not only again, but also higher dollars, but they typically have network of other accredited investors, accredited individuals who may want to be diversifying out of the stock market, or maybe out of crypto, or some other kind of alternative investment, and move it into a more stable product like real estate.
Mm-hmm. So when you had mentioned about raising higher returns, or providing higher returns than kind of what you had promised.
Sure.
Maybe promised isn't the right word, but
that's a very strong word.
I was going to say what you've calculated, projected. There you go. That's the word I was looking for. So so if I'm an investor now, you've done a good job for me. It's kind of the going from active to a little bit more passive.
Right.
So from the investor's perspective, what's the win for them doing some of these larger projects now versus, hey, let's go flip this house together?
Sure. So, especially as we get into the build to rent model now, is more of the focus is, on the flip side, on the flip kind of raises, I should say, on the flip projects is, we're raising $50,000 to $100,000, returning those every 6 months. Now, the challenge with some of those, especially since we're not yet operating as a fund, is, when you're investing in an individual flip, is that you're changing hands, or rather you're investing, and then we're selling, and then we're investing, and then we're selling, and inevitably there's going to be some downtime in between the sale and the purchase side. Again, until we get into a fund position. So with these bigger projects, whether it's a townhome or an apartment, the benefit there is that you're not having to your cash is not on the sideline at any point until typically it's month 15 on the townhome sell side, or apartments it's up to 7 years is typically what we're looking at. So it's keeping your cash in an active investment constantly, allowing your cash to grow on a constant basis.
So getting back to some of those other deals, what are some of the other projects you guys are taking on?
Sure. So one that we just finished up, or are about halfway, I should actually say, is that we flipped a home. So we bought a home up in North Seattle with a large lot, and we are put a detached ADU. So mother-in-law, backyard cottage, whatever you want to call it. It's 1,000 square foot detached ADU in the backyard. So we flipped the home. We sold the home last week, and we are nearly done with a detached ADU. Now, the interesting thing here is that we converted the entire property into essentially a condominium, which allows us to sell the detached ADU separate from the main home, which gives us this incredible LTV, loan to value basis on the detached ADU. Because what we're doing is when we flip and sell the main home, we're effectively getting the backyard for free. So our only cost basis in that is the cost of construction, which in this case is about 40% of the value. So our loan to value, or rather our loan to cost, is going to be 30-40% of the total value. So we'll end up getting in, getting out in about 2 more months with a potential margin of 300 to 350,000 on just one unit.
That's awesome. Yeah. Where did you, or where have you seen that done before? Because I think folks newer are like, how would you even know that? How do you know how to strategically do those things?
Yeah. So first thing to mention is that I'm not familiar with any of the other states, municipalities that may or may not do this. I know that there's probably, I think, 4 cities in the Puget Sound, which is the Seattle area, that do allow this process. So that's kind of the first disclaimer, is whether or not you can actually do this where you're living. That's the first thing to check. And then the second is, it really is just networking with other developers and brokers. Those are my two partners in the industry that we love, and we can't talk to them enough, is really trying to understand, learn from them. And whether it's from a process standpoint, a supplier, a labor, whatever it happens to be, is just really truly networking with those two types of individuals and learning from them.
So what's the future look like for you guys? You're kind of 1 year in on the investing journey, but where do you see this taking off?
Yeah. So I think where it's taking off is 2 sides. It really is going to be in the larger multifamily space. So in the already built apartments, those that are underperforming. So whether there's some kind of operational deficiency that we can go in, fix, tweak, and add value to the expense side, and or on the revenue side, where ideally what we're looking for is leases that started pre-pandemic, so 2019 and earlier, and really understanding how those rents have been increased or ideally held flat. And that way we can go in, we can capture that loss to lease and add value to the assets via income, increasing the income. So that's kind of the one bucket, is the operating assets. The secondary is, again, on the apartment side of more ground up construction. So we've got several different products that the market in Seattle is putting up. It's called small efficiency dwelling units. So think of a 300, 400 square foot studio apartment, putting those up in high traffic, high density areas, like near the universities, near the big hospitals, near the big tech employers. And then from there, expanding our scope and getting into the even larger size ground up construction apartments. So the small efficiency dwelling unit apartments are generally 20 to 50 units. Where we'd like to be operating is in the 100, 150, and eventually the 200 unit apartment from a ground up standpoint.
And what kind of areas are you focusing your search on?
So on the ground up, it's all North Seattle. It's all hyper focused on the North Seattle market. On the apartment side of things, it is the Southeast. So Atlanta, some markets in Florida, and hopefully something in Minneapolis here coming up soon. And some other areas in the States, but it's really the Sun Belt, I would say, Texas and East.
Well, it's crazy to see when you look back. You've been in real estate now for just a short period of time, and obviously you've learned a lot, you've got a lot under your belt. What would you say to somebody that's outside of real estate right now and it's like, you know what, like it seems exciting, I've always thought about getting in some way, shape, or form, or something like that, but just maybe hasn't made that leap yet?
Sure.
What advice would you give to somebody in those shoes?
I think two pieces. It's going to be self-education and finding your passion within the real estate space. So self-education, you got to read, you have to listen, whether it's to podcasts, audibles, or preferably other experienced people that are doing this already.
Mm-hmm.
So that means going up to meetups, whether it's virtual or in person, just getting out and meeting people. And don't be afraid of saying, of asking the simple questions, right? I think that's where I pride myself in doing is, I'll go into a meeting with either subcontractors or developers, and I'll ask the simple questions, even though it may make me look like the simpleton in the room, but it really truly helps me understand, which helps me grow. Mm-hmm. And I know the asking the simple question is going to be a short-term short-term kind of shortfall, but I know the information that I get from asking that question is going to benefit me in the long term. So self-education, number one. Passion, finding your passion within the space is number two. My passion has always been growth, has always been business development, investor relations, working with clients, working with people. And so, that's my passion. And mm-hmm. I've developed my business around that aspect, and I've developed myself around that aspect. And it's finding the partners, whether it's an actual partner or an employee, somebody that can help fill the voids of where, my weaknesses are.
Mm-hmm. Well, awesome. It's exciting to see what you've done in a short period of time, and exciting to see where you're growing. That's fantastic. So for folks that, have kind of heard your story and want to reach out to you or learn more about what you're doing, how can they do that?
Sure. So I've got a couple of different areas. I'm on LinkedIn, Karl Krauskopf. We've got an Instagram at Auroras Investment Group, and our website, www.aurorasinvestmentgroup.com. And you're welcome to reach out to me directly via email, karl@aurorasinvestmentgroup.com.
Awesome. Well, thank you so much for coming on the show. Really appreciated everything that you shared. I think there's just very tangible steps here of kind of what to do, how to grow, and to see a career trajectory here. Yeah. Where, I don't know anything about real estate, and now in a short period of time, you're experienced, you've got great relationships, great partnerships that you've grown, and you can really see where it's taking off. So congratulations on that.
I appreciate that.